Joining us now to discuss the revelations coming out of Westpac is Evan Lucas from InvestSMART. Evan, what does the probe mean for Westpac's succession?
A lot of things, and look, the reason I say that is that the media release they've put out in response to what's come from APRA this morning is pretty lean on information. The biggest thing that I took out of it was actually the last sentence, which actually shows that they will see about a 16 basis point drop in their capital tier 1 ratio as their balance sheet of 30 September. Now, that would therefore suggest that the $770 million they did at a raising after they announced their full year numbers, so before we knew about the whole issue with AUSTRAC, is probably not included in that figure. So therefore, it may explain why the fall in the market today isn't as strong as what you probably would have expected, considering they now are expected to input an additional $1 billion onto that capital number. So just out of all this, it may have itself its buffer. It may have actually already reached the deadline to have $500 million of additional capital on their balance sheet by 31 December. But they clearly will have to tap the market sometime early in the next year to reach that billion mark.
So you're surprised that the hit on the market hasn't been a bit more severe?
Look, Kieran, to be honest with you, the severity has already come, let's be honest. I mean, if you look at where Westpac was before the announcement to where they are now, they're down 21%. So the severity is there. It's very clear that the market has already priced in the kind of risk. They're also starting to really price in the kind of fine that would probably come out of AUSTRAC. Everybody now is of the belief that it will be north of $1 billion. And that, therefore, is part of the buffers that APRA is putting on. I think you've already discussed this. The fact that they've now instigated for the first time ever the BEAR regulations, that there's now under oath sort of investigations to go on an individual level, shows how serious this is, shows how much APRA and ASIC are looking to basically find out who knew what, when and how, and that therefore just adds another level of risk to this overall scenario.
And what do you think this means for shareholders? Is there a genuine risk they could see lower dividends or even no dividends?
Yes, and that is, I think, the next part of this discussion. So the reason for that is you've now got to look at it from the point of view that if they do need to find more capital on balance sheet, the way to do that is to come from earnings and from profit, and therefore most of the profit they've been doing over the last 5 years gets handed back to shareholders in a dividend. So lowering dividends, possibly scrapping the dividend, is certainly on the cards to now meet the new regulations that are possibly coming at them.
Evan, just to wrap up, as we conclude this year, how do you see market certainty right now? Because on the Brexit front, we saw some clarity finally, and we saw the the pound surge a couple of percentage points. On the China-US trade arrangements, the first phase of the deal looks like it's been inked. Is there a better feeling to end 2019?
Interesting question, that, Kieran, because 2019 will be the best year of the decade. And that's the interesting thing around this whole discussion. So if you look at the returns that we've had in 2019, on a capital basis, we're up 21% with a few days to go. It's 27% in total returns. That's better than back to 2011 and 12, were the last times we got into those kind of numbers. Sentiment is an interesting thing to also talk about, because the reason why the markets are so strong, it's not just equities, look at property as well, is that it's being supported by monetary policy, it's been supported by a looser ability to borrow, and also for the first time in Australian history, we've never had cash so incredibly low and basically realistically losing your money. So that sentiment, to answer your question, is why things have been good in 2019 and are probably likely to flow through into 2020. Now, you wouldn't expect to say that considering the economics, considering the slowdown, the MyEFO numbers we got yesterday, but rule of thumb, and this is also university theory, monetary policy does one of two things. It either increases inflation or it decreases. And when you've got accommodative policy, it's trying to push asset prices up, therefore you get inflation, and that is what it's doing, and that is what is happening.
Yeah, indeed. And as you say, the signs are pretty good heading into 2020 as well, after a strong year on the markets this year. Thank you so much, Evan. Talk to you soon. Let's